Hello and welcome. My name is Brian Caplen, editor of The Banker. I'm at the IMF headquarters in Washington. I'm with Christine Lagarde, the managing director. Christine, thank you very much for inviting The Banker to Washington. And let's start by talking about the broad economic outlook. And the IMF has predicted about 3.5% growth for this year and next, which is okay but not brilliant. And you've talked about the new mediocre in economic terms. What exactly do you mean by that?
Well, first of all, we forecast 3.3 this year, 3.8 next year. And what has been striking is how we had to revise downwards over time in the last couple of years, which is an indication of how lower and slower and unbalanced the recovery has been. Many of us thought that after the very, very deep crisis, which was a combination of financial and economic crisis, the economy would bounce back much earlier and the bounce would be bigger than what we are experiencing. Last year, growth was about 3.4, this year 3.3, so it's even slowing down a little bit. And that's really a sort of a symptom of that new mediocre that I referred to.
Okay, and I mean, one of the points you've made is that the other problem is that where we are getting growth, it's not evenly distributed. And we've talked about trickle up rather than trickle down, which is what economists always predict. And you've talked about it not lifting all the small boats. Mm-hmm. So what can the IMF do about that? Or how can it contribute to policy setting to improve that performance?
We try to advise all our members, and we have 188 of them, as to what would be the best policy mix. But it has been unbalanced in that while the emerging market economies had led the growth path for the last 10 years or so, they are now slowing down quite a bit. And the advanced economies that were held back during the financial crisis are picking up a bit as well. But none of that is balanced. And clearly, the low-income countries are paying the price for that as well, because they were fueling by supplying commodities and raw materials in many ways for the growth of the emerging market economy. So you have this sort of almost global slowdown, which is resulting in that new mediocre, which I believe is fueled by some sort of fundamental issues ranging from demographics to aging to the sort of rapprochement between the various stages of development to more conjunctural issues and legacies of the crisis.
Okay, now, I mean, if we turn to an economy that's been hugely successful, I'm talking about China, I think it contributed something like a third of global growth over the last 7 years, but it very much plays to those themes, doesn't it? It's an economy going through a transition. It does have an aging problem, but also it's trying to transit from being a manufacturer and an exporter to an economy much more based on consumer demand and services. And some people have talked about it getting into a middle-income trap. I mean, how do you think China can face those challenges best?
Well, first of all, I would observe that it is transitioning. And some 5-6 years ago, there was a concern as to whether or not it would shift from being purely export-driven to being more domestically driven, which is happening with a very heavy sort of pull from investment, probably excessively so, and a gradual shift, probably a bit too gradual, towards consumption. But it is moving from export to investment to consumption. And we very much support that evolution with the hope that the Chinese authorities will be able to grow their capital markets, make sure that enterprises of China will be able to respond to the needs of consumers and will be able to finance themselves. Together with that shift, you also observe a change in the governance, a change in the economic structure of China, with hopefully a reform of the state-owned enterprises and more reliance on market forces.
Okay, but now talking about that reliance on markets, I mean, we've seen the stock market have problems recently, and we've seen the Chinese government intervene with good intentions to protect savers' savings, but probably in a way that you wouldn't see in a Western economy. Is that something the IMF approves of, or is a little bit uncertain about? Or?
Well, there are two characteristics about the Chinese capital markets that we should not underestimate. One, it has grown massively over the last 18 months or so. And the Shanghai market had grown by more than 100%. And yes, it has taken a rest, if you will, and gone down massively. And that's the first characteristics. Very, very erratic and strong movements, up, slightly less down. Second is that it does not have the large players that we're used to, the pension funds, the big fund managements. It is a lot of individuals, Chinese people, who actually are attracted by quick gains and go to the market as a result. And the policy move by the Chinese authorities was probably precipitated by that second characteristic, the fact that it wanted to protect the small savers, the small investors, more than probably it would have moved had it been large investors. Hopefully, this will have been a learning experience as to what is best and when to intervene and when to provide the liquidities to sort of slow down the process. But it's clearly an interesting time when market forces are sort of emerging, are gradually taking shape, and where the controls and the supervisions are not yet at the level where it can gently let market forces take their turn.
Okay, let's turn now from an economy that's been very successful to one that's been less successful. And obviously, talking about Greece, it's probably been your main headache, I would imagine, since you've been at the helm of the IMF, and we're still not through with it yet. But are there some lessons we can learn from the Greek bailout in terms of how we address bailouts going forward?
Lesson number one from Greece is that we are all better off having the right numbers. And I think, I have good memories of 2010, 2011, where the deficit numbers were suddenly going from 6 to 8 to 12 to 15, and where there was too much obscurity about those numbers. So that's lesson number one. Make sure that we have the right numbers, the right data, and that we give policy advice on the right basis. I think the second lesson is that it's pretty good to have a resolution system and a bail-in mechanism so that the right losses are taken and absorbed where they should be taken. This is progress that has taken place in the eurozone because those systems are now in place. They were not in 2010. Third lesson, I think, is a dose of realism as to what should be expected in terms of potential growth, in terms of energy for reform. But bottom line, for me, the lesson is that to put a country back on its feet, it takes two legs. And Greece needs to make all the hard decisions, and hopefully will do so. I'm talking about structural reforms. I'm talking about changing the culture of society. And the other leg is the one that deals with the financing and with the debt burden, which also has to be realistic. And in a monetary union requires a degree of solidarity amongst the members, which hopefully is going to be also in the cards.
Okay, well, that's the sort of most contentious issue, isn't it, when we talk about debt write-downs? Because the IMF has recently come out and said that there has to be some sort of debt restructuring, otherwise it's going to go to 200% of GDP. But actually, you went into the bailouts in 2010 and 2012 with those very high debt numbers. I mean, in that instance, wasn't the IMF actually sort of breaking its own policy guidelines? That you have to get involved when you can see the debt being repaid and the sovereign can go to the private markets.
What happened in 2010 was, remember, a time right after the Lehman crisis, when the sovereign debt crisis was looming or was brewing in the background, and where there was no firewall, no systemic defense at the eurozone level. There was no European stability mechanism. There was none of that. And the risk of systemicity of that Greek crisis was extremely high at the time. So in those days, doing a bailout, doing a debt restructuring, were really sort of existential questions that the Eurozone had to address and resolve, and couldn't address and resolve on its own, which is why the IMF had to be involved at that moment. Later on down the road, 2012, there was a serious debt restructuring, and the private sector took a bit a big hit in the process. My recollection is that there was a 53% write-off on the private debt, and a lot of the debt moving forward was thereafter held by public institutions, which is now causing this issue and putting the question on the table of what are the public institutions who are the partners and the current firewall holders for euro area members. What are they going to do, and how much are they prepared to shoulder in order to help one of the members?
Okay, well, let's talk about the eurozone itself then. I mean, there's obviously some flaws in the structure to it, and you've mentioned some of the things that have been done to help ease that, but what more needs to be done now? And I'm especially in the climate now we've got where, you know, the major countries, France and Germany, seem to fall out a little bit over the whole Greek issue, so no, they don't seem to be all going in the same direction.
You know, I think the eurozone as a monetary union was unfinished business when it was hit by the crisis, and ever since it has been work in progress, and it continues to be so. When in 2010 we got involved in the situation of Greece and then of course, you know, Ireland, Portugal, Cyprus, we consistently and repeatedly told the euro area members that more needed to be done at the euro area level, and we advocated very early on a strong and high firewall. We strongly advocated a strong and solid, comprehensive banking union. We suggested reinforcement of the fiscal union so that the unfinished business could be finished stronger and more resistant to shocks, whether exogenous or, you know, internal shocks, if there were such things as Greece yet again. It did happen. If you look at how it evolved over time, the firewall was eventually set up. It was late coming in. It was not enough, but it was built, and then it's, you know, it's what it is today. 500 billion euros available, and with good capacity to commit. AAA signature, and banking union has been significantly reinforced. Is it strong enough? Does it have a common backstop? No. So we still say that it needs to be finished and made more solid. On the fiscal front, there has been improvement with you know, sort of two phases in a way: the preventive and precautionary phase, and then the sort of curative phase as well. With more signals on the radar screen, I would hope, than what we had, which was just the, you know, the debt level and the fiscal deficit as barometers. So there has been progress, but you know, more needs to be done when we see the banking union in particular. Yeah. Okay,
let's finish by talking about Peru, because the annual meeting is going to be in Lima in October. And Peru is a country that has really followed the rules, hasn't it? So it's kept a kind of macroeconomic stance, a very cautious stance. But it has suffered recently because of the sort of tapering tantrum and also the commodity price falls. I mean, how should it now be steering its economy given that?
It is one of the most successful economy in the area, and you know, while cruising at a growth rate of about 5%, it had a slowdown in 2015. We forecast it at about 3% this year, and you know, a bit more next year. But it has had the shocks that you mentioned: tapering tantrum, currency went down, the commodity prices has affected all Latin American countries, Peru included. But it hasn't done badly in the face of those shocks, and we expect it to improve, as I said, this year. It has initiated a few stimulus measures in the last few months. We believe that is fine, and that should be enough, and it should be a matter now of implementing those stimulus measures, but not do more of it. And continue to, you know, keep those macroeconomic fundamentals healthy as they are.
Thank you very much, Christine.
Thank you.